Welcome back to Dividend Deep Dives, the series by Mindshift Theory where we take a closer look at dividend-paying stocks and ETFs. And this week we're going to look at investments that are about to go ex-dividend. Now, if you're new to investing, let's quickly cover three important terms that you'll hear throughout this video: dividend payments, ex-dividend dates, and payout dates. Firstly, a dividend payment, or simply called a dividend. This is a portion of a company's profits that it pays to its shareholders. And when you purchase even a single share in a company, you are one of those shareholders. You can think of a dividend payment as the company saying, "Thank you for investing in us. Here is your share of our profits." Now, the most important date to understand and be aware of is called the ex-dividend date. This is the cut-off date that determines who receives the upcoming dividend payment. To receive the dividend, you must own the shares before market open on the ex-dividend date. For example, if a stock has an ex-dividend date of June the 15th, you need to have purchased the shares before that date in order to qualify for the dividend payment. You can purchase the shares a day before the ex-dividend date, and you can sell the shares the day after the ex-dividend date, and you will still qualify for those dividend payments. Next, the payout date. This is much simpler. That's the day that the dividend money actually arrives in your brokerage account. So in short, when we're dividend investors, remember we need to own the shares before the ex-dividend date in order to qualify for the dividend payment, and simply wait until the payout date to receive the cash. With that out of the way, let's look at 4 dividend-paying investments that have their ex-dividend dates coming up this week. First up is Garmin, ticker symbol GRMN. Now, most people know Garmin for its GPS devices and its fitness watches, but Garmin is also involved in aviation technology and maritime navigation products. Garmin's ex-dividend date is on Monday this week, June the 15th, and the company will pay a dividend of $1.05 per share, with shareholders receiving that payment on June the 26th. If you look at Garmin's chart, you'll see that it's navigating a range right now, somewhere between $230 and $243. It'll be interesting to see if it breaks out of that range, either up or down, but either way will create an opportunity for investors. At Garmin's current price, the dividend yield is approximately 1.76%. What makes Garmin particularly interesting for dividend investors is its strong balance sheet and consistent profitability, as well as its history of rewarding shareholders while continuously investing in innovation. While the 1.76% dividend yield isn't particularly high, many investors appreciate the company's combination of dividend income and long-term growth potential. Next up is Meta, ticker symbol META. Meta is the parent company of Facebook, Instagram, WhatsApp, and Messenger, and it's one of the largest communication and advertising platforms in the world. Meta's ex-dividend date is also on June 15th, on Monday this week. The company will pay its shareholders just over 52 cents per share, with the dividend being paid out on June the 25th. Meta's current dividend yield sits around 0.37%. And Meta is in the communication services sector of the S&P 500. Now, what's particularly noteworthy is that Meta only recently started paying dividends, about 2 years ago. Historically, the company focused almost entirely on reinvesting its cash into growth initiatives. The introduction of a dividend signaled a new stage of maturity for the business, while management continues investing heavily in artificial intelligence, infrastructure, and future technologies. For dividend investors, Meta is more of a dividend growth story than an income play. The yield is relatively small today, but we'll be watching closely to see how Meta increases its dividend payments over time, and if dividend increases become a regular part of the company's capital allocation strategy. Right now, if you have a look at the Meta chart, its price has dropped significantly, and this is potentially an opportune moment to own Meta shares at a lower price. Third on our list today is ticker symbol SPYI, a high-income ETF managed by NEOS. Now, unlike a traditional stock, SPYI is an ETF, or an exchange-traded fund that invests in large-cap companies represented within the S&P 500. And it uses option-based strategies to generate additional income, the same option-based strategies that are part of the wealth triangle method. The ex-dividend date for SPYI is June 16th this week, and payout date is only a few days after that, on June the 18th. The fund is scheduled to distribute approximately 53 cents per share, which is the reason that SPYI has attracted so much attention from investors, because its distribution yield is currently around 12%. That yield is significantly higher than what investors would typically receive from a standard S&P 500 index fund. Of course, the higher income or the higher dividend often comes with trade-offs, right? And trade-offs that we need to be aware of. The options strategy used by the fund can limit its upside potential, particularly during market rallies. However, for investors that are focused on cash flow, SPYI is a popular choice in the high-income ETF space. As always, as investors, we need to understand where our income is coming from and how this particular strategy aligns with our long-term goals. And finally, we have DIA, ticker symbol DIA, another ETF, this time managed by State Street Global Advisors, and tracking the performance of the Dow Jones Industrial Average by holding the same large blue chip companies that make up the Dow Jones. The ex-div date for DIA is this week on the 18th of June, and the dividend payment will be distributed on July the 1st. The fund currently offers a dividend yield of approximately 0.64%. Unlike Spyi, DIA is designed to primarily provide broad exposure to some of America's most established companies, including industry leaders across multiple different sectors. For investors simply seeking a way to own a basket of blue chip companies while collecting a modest dividend income, DIA still remains a popular option. And while the percentage yield isn't particularly high, many investors appreciate the combination of diversification, stability, and long-term capital appreciation potential. So to wrap up, those are the 4 upcoming dividend opportunities to watch for this week. We have Garmin and Meta, both with ex-dividend dates on Monday, June the 15th, and then SPYI with an ex-div date the next day, June the 16th, and DIA with an ex-div date on June the 18th. But remember, chasing dividend payments alone isn't usually a winning strategy, which is why, again, I teach the wealth triangle method in my course. And it is important to consider the overall health of the company or fund and its long-term prospects, and whether or not it fits in with your own investment goals. If you found this dividend deep dive helpful, please be sure to subscribe and share this video, and join us next week as we take a deep dive into yet another dividend-paying stock or ETF. Thank you for watching. I will see you in the next dividend deep dive.